My name is Karla Brollier. I'm a partner at Velveteen Ventures. We are a venture fund, and I focus specifically on climate change, and ours is the first Indigenous woman-ran venture fund in the U.S., and I'm very, very excited to be here with this amazing panel of other people that work in the economic space as well. And so I'm going to turn it over and let everybody briefly introduce themselves. And we have Michael, MJ, and Brett here. So if we want to go down that order and just give a brief introduction.
Thanks, Karla, and good morning. Tringwinsi. My name is Michael Hungerford. I'm a member of the Gwich'in First Nation. The Gwich'in are in what some would call Alaska, Yukon, and Northwest Territories, so the Arctic Circle and the Mackenzie River Valley. I live in the Musqueam Indian Band territory. My father's side is settler British. My mom's side is Indigenous. And my brother and I have co-founded Seven Generations Capital. Our purpose is really to accelerate and support Indigenous self-determination through the land development partnerships. So we work in Canada. We focus on Indigenous land development as a way to unlock and support community ownership, environmental goals, and social and cultural goals. I spoke last year at the Brief and Bold, and I have a very personal story, which we won't have time to get into, but it really drives and motivates our work every day. And it's an honor to once again be here, and thank you.
Hi everyone, I'm Marie-Josée, but you can call me MJ. Once we get to have conversations after this panel. I am the Chief Operation and Impact Officer at Raven Outcomes Funds and Raven Impact Foundation. I am of Acadian and Mi'kmaq descent from the East Coast of Canada, but lived in Montreal, and I've been a Montrealer for the past 20 years. Raven is an outcomes-based finance organization, so we support interventions in climate and health, but health of our people, health of our planet, so very holistic approach to those ideas and concepts in Indigenous communities in Canada and the United States, hopefully. It's our first outcomes funds. We're currently raising capital, and we have our foundation that is there to really support all of the impact work and incubation phases so that our communities do have the time and the safe space to build the right interventions in those focus areas that are climate and health. It's prevention-based projects, so we really focus on preventing chronic diseases, for instance, and focusing on the increase of well-being in our communities.
Thank you. My name is Brett Isaac. I'm a member of the Navajo Nation and CEO and one of the co-founders of Navajo Power. I grew up in northern Arizona on one of the largest Indian reservations in the Navajo Nation. It's roughly the size of West Virginia and has a lot of challenges, poverty and unemployment hovering at near 50% of a lot of the population. And a lot of that's due to, policy and things that have impacted us. So Navajo Power was developed out of a conversation about energy in our economy. Well, a lot of the Navajo Nation's economic drivers are energy related. And as the transition from fossil fuel energy to clean technology has been occurring, a lot of those impacts have been felt squarely on the shoulders of Indigenous communities, having to address the loss in revenue, the loss in jobs. But an opportunity arises with that to replace them with things that are more culturally attuned. And so Navajo Power kind of sits in this little straddle position where we want to honor and acknowledge, the culture and history of our communities and enrich those, but balance that and blend that with new opportunities that help communities and families, take care of their needs and self-fund and self-support. There's a long way to go in those conversations, but what we feel is that as Navajo Power, we're an energy development company that focuses on developing some of the largest infrastructure projects in the country. The things that we work on can help communities also learn more about their finance, learn more about policy, establish marketplaces. So we feel like this work should also complement the initiatives of the community to help them establish what I call like neurons and connections to build out their economy the way that they see it. And so also engage in businesses that fit their value systems, but allow them to export their surplus into places that, return that value back to them. So that's why we feel like energy development is a key piece of these conversations, but it's just one of very many things that strategies that can be employed. And so for me, that's how I got into this space, is looking at, the first thing was homes that didn't have electricity. And now we've developed solutions for that. Now it's about how do we regenerate communities and economy. We have solutions to power homes. Now we need solutions to empower communities, and that's what we're building.
Thank you. Let's start with some of the questions then. Michael, you have a really interesting business and a very interesting business model. Would you want to talk about some of your investment strategy and what makes it a little more distinctive?
Well, it's a community-focused approach, and I just want to acknowledge my co-panelists. All of you are. I'm really grateful for the work you do, and I feel like we're all part of a movement. We're changing minds and changing how capital flows into Indigenous communities in a very healthy way, very values-aligned way. What our strategy is all about is unlocking Indigenous assets, and the asset that many Indigenous communities have is land, and that land base is growing over time with land-backed strategies as well. And so the question is, how can a community unlock value that benefits the well-being of that community through the development of land? And so we are a values-aligned partner in that endeavor, and we focus on listening, first of all, to community needs. There's often a laundry list of issues: housing, cultural space, commercial space, health space. And so we design projects that are economically feasible, where there's market rate returns for the projects, where the community can be financially included as an owner and be able to identify culturally, through ceremony, language, everything around the project. It's all wrapped around community, very holistic. And we also aspire for the highest standards of environmental sustainability in our projects. There's often a lot of land restoration work. What makes all of this possible is the unique advantage of Indigenous lands. And in Canada, Indigenous lands are only under federal jurisdiction. So what that means, and in real estate, is that most regulation and tax happens at the local level, at the municipal level, at the provincial or state level. The absence of all of that regulation means that we're able to deliver housing 20 to 30% less cost than anywhere else in the country. In a country that has a housing crisis, in a country where I think people are looking for more community support and community values. So we're able to offer a differentiated, advantaged solution through Indigenous land development. And so it not only serves incredible impact goals, but it's also serving the broader society. Somewhat of an ironic way that Indigenous communities, I think, have many solutions, which I'm sure we'll get into, that are innovative and are going to serve as an example of how to live in balance, how to engage a whole community and not leave people behind. And I think that's really, the opportunity is enormous, and we bring, as an Indigenous-owned firm, we bring the values to that partnership in a way that's very unique compared to other people in our industry. And so, yeah, it's just, there's so much opportunity and so much need in these communities.
Thank you. That is wildly fascinating. And I think moving on, MJ, we talked a little bit about this yesterday, and the work that you're doing is absolutely fascinating, especially in the space of what risk means to you and how you're redefining risk in this space in particular.
Yeah, thank you, Karla. It's funny because we had a little bit of a conversation yesterday about this, and every time we have these conversations, I keep thinking, it just stays with me. I think for us, the question is, what do you mean by risk, right? And when we started this work, our perspective was, well, the risk of not doing anything is dramatic. We can't not act and support our communities in growing programming in health and in climate. There's incredible needs, but also incredible forces in our communities. And we need to be able to provide the right tools. And sometimes that tool is actual capital. so that we can deploy large-scale interventions that will change lives for the better. And so we're really looking at risk in terms of like collective risk and looking at how the current status quo is impacting our community's well-being. And I think this is true in Indigenous context, but I think it's true also in other contexts. The risk of not acting when we have a burning planet is dramatic. And so we decided, well, let's see how we can subvert capital so that it serves our communities rather than serving the richest on this planet. There are ways of doing that. And so our work is really community-centered, community-led, community-owned, and we look at collective ownership in the work we do. So our impact pathways, that's how we start our interventions, are always co-designed with community. And when I say community, I really mean all stakeholders in the community. So we have the families, the kids, our elders, knowledge keepers, people in leadership positions, subject matter experts, but we also invite government officials, we invite some investors around the table so we can have a holistic conversation about, okay, if we were to tackle type 2 diabetes in the community, what does that look like? What are the interventions that we need to build that are embedded in local culture and we know will be successful in the long run and are sustainable? And so for us, this approach is how we really consider risk. It really, again, is about shifting your perception on risk and making sure that you're looking at sustainability and a holistic approach to well-being of our people and our planet rather than enriching a few.
Question for you. If you're delivering a solution and you're getting compensated on outcome, what risk is there? Like is it like it's way less risk, right? Like is even risk like?
Yes, thanks, Michael. Yes, so if we were to look at risk in a more traditional, investor perspective, there's way less risk, indeed, because our community-driven outcomes contract come from the, I guess, not so traditional, but traditional SIB, social impact bond. The idea of a bond is that you're backed by government. So in our context, government will come in and purchase the outcomes. We have our outcomes contract signed ahead of deploying capital. So for an investor, there's very little risk in investing in a project like this because you have government that is here to purchase the outcomes. I've already agreed. Outcomes are purchased when they're met, but execution is really well defined, and we have the best in class in our communities to deploy those interventions. And it's evidence-based to icing approach, meaning best practice in Western knowledge and traditional knowledge working together. And so for an investor, the risk is actually minimal. Thank you for your question.
That is a great question. Anything else do you want to add anything on risk, or what your thoughts are on redefining what risk is, Brett?
I think one of the things that we've learned in Naval Power is like there are a lot of incentives and things that drive people to do things. They're all things that de-incentivize folks. The qualification and quantity of risk has been outpaced in a lot of Indigenous communities because it just seemed, as a higher cost, a higher, impact area. But that means that the impact of doing work in those spaces is multiplied, meaning that if we can undo a lot of those things and untangle the complexity that risk has produced in these places, we actually open up new marketplaces where dollars have more impact. For every dollar spent, every unit you kind of put into it has a return that if you employ a strategy that's effective and finding the proper injection point to put that capital to work, usually does have this kind of effect of undoing these things, but it requires a steady hand, and it requires really good forethought and organizations that carry a lot of these things very delicately, because you can also easily add to that risk by carrying on in nefarious ways. And so we kind of blend a balance of trying to solve these problems but not agitate them to where we're outsizing the risk that investors won't find their reasoning to, or their incentive to play in the spaces that we're trying to contribute to.
I think we look at risk from the lens of the community, the risk to the community, and then we look at risk from the lens of the investor. And we're kind of in between. We raise funds, and we're trying to mitigate risk in everything we do. The strategy that we focused on is in land is to focus on the biggest urban centers where reserves in Canada are spread out across the country. And so our strategy is to focus on those in Vancouver, Montreal, Toronto, Victoria, big urban centers where the risk of filling a building for residential is like, very low because there's less than 1% vacancy rate. So the strategy in terms of the market where we're focused, the geography is de-risked. When we work with Indigenous communities, because there's no municipal regulation, our partners control the zoning. So in real estate, a huge part of risk when you invest in land is to get the approvals. So our partner, who's our economic partner, controls the approval of what we build. So that's a huge advantage for us over traditional real estate. And we don't have to place capital into land and speculate on entitlements because we only vend in our capital when the project is ready to go and we have the entitlements already secured. So again, way less risk than conventional real estate. And then we use conventional instruments that our capital understands, like long-term land leases, which are very common in the UK, even here in the US, universities, airports, and the federal lands have long-term land leases. We use conventional instruments as a way to secure title that allows us to borrow against the land with our partner. And so the whole structure is, and then to the community, we mitigate risk through transparency and trust. Everything is open book. Everything is about replicating our capacity in our partner and sharing knowledge both ways and building something that can be scaled after we're out of the picture. Because our goal here is self-determination for our partner. So the trust and the transparency is everything. And we've been developing this strategy for 10 years. And we typically won't enter into a project until several years have passed, where we've listened to communities fully engaged, fully involved. And so the risks are really much less than conventional real estate investing. And that's something we have to educate our capital on and the trust we have to build with our partners. But the momentum is accelerating and the opportunity is 350 billion of opportunity just in Canada. So it's been designed from day one because what we're trying to do is scale this. It's not enough to do 20 units of housing. We're trying to do 20,000 units of housing. So we want to bring in large-scale capital, safety for everybody, safety for capital, safety for community, and that's a solution that gets me really excited.
Oh, that is really interesting. So what kind of market response have you seen so far based on that?
Yeah, we have momentum, right? So we have projects that have finished, that are midway, and then we're raising a fund right now, and we've had a first close behind us and targeting 300 million, and there's some wonderful limited partners, some of which are in the room today, who have supported us. And so it absolutely is working, and this will succeed, and it is a yeah, it's got all the ingredients for success, for sure. And we're trying to share our experience with others because this is something that can be replicated. This is a new way of partnership with community where there's that level of inclusion and ownership. Typically, what happens in my industry is developers will approach a community and extract, right? There's not a relationship, there's not trust, there's not inclusion. So it's about an extraction, the community's left out. And the difference just on the financial side of that math for the community is, in a real-life example, a community might get $20 million for a land lease, but when they're in partnership and they have ownership over the same 100-year period, they'll get over $1.25 billion. So it's that kind of delta that is really exciting. And if the whole market took this approach, Indigenous communities can really stand to benefit much more by being included.
Yeah, and MJ, what have you seen as far as response and feedback to some of the work that you're doing right now as well?
Yeah, it's interesting because I still have a hard time thinking about our work as a market.
Yeah.
I really think about our work as, again, supporting communities and building more opportunities for thriving families and communities. But so I think I'm going to speak in those terms. So the challenges in our communities are enormous, but the willingness and the desire to change that situation is probably threefold that. So there's a lot of incredible energy and people at the table wanting to do work. So coming from community, there's a lot of demand and a lot of people knocking at the door saying, whoa, what you did in this community, we want to do the same. Or, hey, you did solar installation in this community in deep retrofit. We're thinking of doing geothermal, can we do that? The answer is absolutely yes. And then we had a community organization that's working with 3 First Nations saying, well, we do nature-based solutions and nature conservation. Is that something we can do with outcomes finance? Absolutely. So there's so many opportunities in really supporting the grassroots work that communities are already doing and amplifying it, scaling it to a place where for them it was not even part of the reality. And so that's also what drives me, is seeing the sparks in our partners' eyes when we say, well, instead of 500,000, why don't we do 5 million? And they're like, wait, what? I'm like, yes, this project is fantastic. It can scale and the outcomes are unbelievable. And we know we have a partner, a government partner, that is there and interested in purchasing the outcomes. And we've started to have conversations also with insurance companies. Interestingly enough, they see our work as insurance on their work. If we're working full scale on prevention, then for them, it's all benefit. And so we've engaged in conversations and, okay, what would it look like for insurance companies to come in as outcomes purchasers? It needs to be at a certain scale, but I'm not worried that we're going to be meeting that scale soon.
Thank you. Brett, same. Like, how has the market responded to your work and what you're providing to the world?
You know, as energy developers, we're a little, and you know, our work's in the United States predominantly, so. You know, what's interesting is like trust building has been like a key component of what we're doing. And to kind of understand that, you have to go back in history and understand that energy has been traumatic for Indigenous communities for decades. And so in moving forward, part of the challenge is you also have to atone and do some degree of healing for folks to be able to engage these industries, because the resistance to like wanting to see a build out of an energy economy in a lot of these communities is because there's still a lot of outstanding commitments and promises that were broken or made. And so as an energy company, one of the things that we kind of create as a mantra is like, we didn't create these problems, you know, we inherited them, but we have to own solutions going forward, meaning that like it feels very like lopsided that it's on us to solve these things, but that is actually the care that goes into putting your foot in the ring and saying, I want to deal with this, is you have to absorb all the responsibilities, because if you leave any of those lingering things out, you kind of leave like these linchpins that could undo a lot of the work that you're doing, because trust building, you know, is largely a big part of how these marketplaces get established. That investment that we've taken as an energy company has largely gone to us building out these trust mechanisms and systems, because we also have to give these movements the kind of locations to make decisions. And I say that because, like, you know, community means a bunch of different things. It could mean government, it could mean society, it could mean family. There's all different scales of that. But you need to be able to have some sort of, you know, representation as that community that allows you to make decisions, defend your, you know, your initiatives, but also recoup the benefit that comes out from the development of these projects. And that's something that we're looking at, is we have to also help communities design the future of how they employ the kind of benefit from these things, whether that's institutions that help finance things. And for us as energy companies, it's really about looking at what revenues can do for communities when projects are developed. And that's a big piece, is like putting money in front of a community that has never had a financial, you know, literacy kind of understanding can be very dangerous. And so we also have to carefully think about how do we inject these types of resources so that there's positive growth from their outcomes, not something that starts a fight in the community that lasts, like the Hatfield and McCoy legacy, where it just rolls over year after year. So that's something with us, is like that trust building part and working with our partners. And that's why we went to the impact world, because in order to finance the initiatives that we felt were needed in these communities, we developed large scale energy projects. So you're looking at huge solar farms. On a surface level, there is a business case there, but the impact of what we're doing is going into communities, using that initiative to essentially drive revenue into these places that largely didn't have access to that before. So we do the work of creating that equity, much like, my co-panelists here. There's a part in there where it's like you're kind of giving up part of yourself for the greater good of what you're trying to do. And a lot of times that can be scary and very, like, it feels like you're caught on both ends, because you're trying to do something that you feel is very positive, but you're also trying to be protective of it from the traditional mechanisms that were extractive in these places. And that's where we're always like, we're dealing with folks that understand what we're trying to do, but we also have to remember the folks that took advantage of our communities are still out in the ethos. So it's like we have to be very diligent and careful about our partnerships and collaborations, so that at the end of what we're doing, the mission is still intact. Because every time you bring in new resources, new partnerships, it kind of challenges your ability to hold that mission intact, because different priorities come into play. And so surviving the duration of a development period also means having that mettle and capability to keep your, intentions pure and really, impactful by the end of the work, because the dilution of those things is really what a lot of our communities have been pointing to as like what they call failures. Is essentially this promise was made, but it was only delivered in this format. And that's because usually investors came in and said, maybe we don't give them $10, let's give them $5, Those types of things don't sound like they're very prevalent, but they happen to developers on a daily basis. And so we kind of have that front line of saying, no, we need to hold the line higher for the value for these communities. And that's kind of what we've seen being like the response is we got a lot of folks that are appreciative of what we're doing. But we see it from a lot of the investment space where they're like, okay, they're very selective on where they put capital in, because they know that it requires a very specific injection for it to be effective. And that's what we as developers are trying to build, is the best possible place for capital to have the effect and impact, through all these technical mechanisms, which is what we're all working on.
I want to add something on the capacity building part, because I think it's a fundamental element of all the work that we do. I was in Denmark for a masterclass on outcomes-based finance 3 years ago now. And they were building a type 2 diabetes reduction initiative, very similar to the one I was starting to work on at Raven. And so we went to visit their facility. And they said, we were starting with very little, and we get there, and they have this amazing Scandinavian home where they're hosting the program, this chef kitchen, a gym, a daycare, a garden. And I was like, what do you mean you're starting with nothing? Right? Like the place was so amazing. It was central. It was close to like this amazing grocery store. And I was like, wow, okay, you guys, I don't think you understand. Like, when we are starting to work on these things, we have to build sometimes everything from scratch. And the community is there, the community is willing, but the capital required and also the time required so that we are really setting everybody up for success, real success, is not the same. And the acknowledgement of that difference is fundamental. And I think we need to be very transparent that not only is it worth it, that it is necessary, but it will take time. And for us at Raven, the solution that we found is to have the foundation work alongside the fund. Some of this work is philanthropic by nature and will require time and can't be put under the stress of financial returns and on the fund mechanism at its speed. It needs to exist on the side and have its own pace so that people can really be included and we can build capacity in the way that meets the community, but also is embedded in the community's culture and practices so that it sticks and it stays. And for me, that example it was a pivotal moment for me, realizing, how we don't have the same expectations and we don't start at the same place, and we need to be vocal about that.
Yeah, capacity building is a huge part of the legacy of our work. And what that looks like when we have an open book, a trusting relationship, and we're collaborating daily, weekly, quarterly reporting, we're doing it all with our partners. We're including them in procurement, so they're building businesses within the community where the effects of the investment can have a multiplier effect, and there's jobs and career paths and pride that community members can come back and work in the community. There's so much of historically an outflow of members or citizens leaving the community, and now it's about coming back, where there's housing options, there's jobs, there's career paths. We share our fees with our partner, so it doesn't cost our LPs, our performance on our investment anymore, but we share our revenues from the services we provide on projects with our partner, so they can build development services, property management services, leasing services. So they're building a real estate development management company, investment company, that mirrors ours. Because, as I said before, one of their greatest assets is the lands themselves. And so they are in a position to steward those lands and manage those lands going forward. And it takes time. So the way we've also structured time into this is we have a closed-ended fund that does the development work, but then we roll those assets into an evergreen fund or a core fund, which can then stay in relationship and continue our impact work over the long run. And I think it's that gives our capital the opportunity to exit and get liquidity, or decide to stay in on a project-by-project basis. So again, we're trying to design this all to de-risk and have a long-term view how we can support self-determination.
Thank you. So what kind of opportunities and advantages are you seeing inside of this Indigenous economy in particular, Michael?
Well, I mean, I think when you have a community lens on economic development that is inclusive, and you look at the assets that communities have, whether it's land, resources, jurisdictional advantages, which we see in Canada. It's just tremendous way for the community to participate in an emerging economy where, in the past, our communities have been left out and separated from the financial system. Now there's an opportunity to actually participate and actually lead. So whether it's housing or resource development or ports and infrastructure, there's so many elements of the economy where Indigenous inclusion actually has an advantage over the rest of the market, accessing cheaper debt. The list goes on. So it's not just in real estate where there's opportunity to participate and include. And I think that's where industries are starting to wake up. What I see, with my fellow panelists is our whole approach is values-based and Indigenous to Indigenous. And I think that's why we're sort of more unique and able to create better partnerships that are more values aligned. That's where our advantages are. And I think if we can demonstrate a different path for overall industry, what does engagement look like? What does following cultural protocols look like? How, all of those elements can be learned and shared with the entire industry. You don't have to just be Indigenous to have strong aligned values. So we're trying to demonstrate this over and over again through our work, and that's why it's more like a movement that I talked about.
Thank you. And MJ, what do you, from your vantage point, what are you seeing as far as the competitive edge and the opportunities?
Yeah, again, I don't really think in terms of competition, but in collaboration. And I would say that's probably, it's funny, last year's SOCAP key phrase was we move at the speed of trust. And I was like, wait, we say that all the time. But that's very much what's anchoring all of our work. And I think that means that we build strong relationships that are there to last. we do our work around and for these relationships. And to me, that deep engagement and collaboration is probably our competitive advantage, because it means that, again, we're not leaving people behind, we're inclusive, bring people in, and we're creating these amazing relationships where people are heard. And it's not always easy, like make it sound like it's like happy-go-lucky. There are difficult moments, right? But I think these difficult moments are necessary when we can unpack trauma, we can have a trauma-informed approach, we can bridge two communities, and like Brett was saying, communities are, yes, are different nations, but also different type of people we work with from different industries and sphere. We can create bridges for these different silos to then speak to one another and reinforce the work that we're doing, so that we have many people supporting its realization. And that reduces risk immensely and brings it at a very competitive level. But also the potential for scaling is enormous.
That it is. And Brett, you're actually in market and competitive. So from your perspective, what are some of the opportunities and some of the potential advantages that you've seen?
I mean, to point it out, like we've done assessments on indigenous communities in the United States. There's over 200 megawatts of existing capacity on tribal land, 200 gigawatts, sorry, megawatts is smaller, gigawatts, and that, has the ability to power millions of homes. But the trick is to unlocking these places, because a lot of them have maybe assets that are stranded or financial mechanisms that are overly complex. So the opportunity that we see is there is, as a company, we're looking at these tribal places, like how do we help them, unlock their potential, because there is opportunity in a lot of different places, but it requires a different form of capitalism, because the ideas behind why they would be incentivized to develop these projects is really driven by things that they're trying to solve for on the ground, the needs of housing, the needs of, livelihood, all those pieces. That is not traditionally the role of an energy development company, but it's something that we're finding is value added that we need to bring. Because the dollar, like showing them $1 is not enough to incentivize them. And it shouldn't be, because that isn't the objective. If accumulation of wealth, we'd all have massive wallets and purses if that was like the goal of people. But the goal is actually the ability to generate resource to solve your needs. That confidence, and that's what we're thinking differently about economy and capability and capacity, is it's not giving them enough padding in their bank account that they can solve the needs they have. It's sharing with them and collaborating with them on a project that gives them the ability to replicate the things that we're doing: land acquisition, project finance, engineering. There's very technical skill sets that we as a company can help bring into these communities that will help them in other things that they're trying to accomplish. But for us, what it requires is we have to be very good at what we're doing on the engineering and the energy side of stuff. But we have to be equally as good about economic development and helping to bring the resources into the community. And a great example of that is the opportunity for tribes to invest in these projects is really high. But go to any one of these communities and try to get a business loan, and you'll immediately find out that a lot of difficulty exists in accessing capital, even to governmental entities that have tremendous backing behind them and tremendous liquidity. It goes back to there still needs to be some established practices that these communities and capacities that they develop, so that they can participate in things that we're doing. So as a company, that's one of the things we realize is we can't just go in, build a business, and then exit and run away. It's about building roots. We have to actually go in there, build partnership, because our projects will take years to develop, and they'll operate for decades. And so we're looking at long-lasting, established relationships, which is not typically what you see in indigenous communities and in capitalism. Normally you see a very quick transaction that pulls out something. So this is a different neuron we're building. As a company, we're looking at taking the social capital that's out there to be able to put it to work to solve these challenges that have been coming from the voices out of these communities for decades. And to do that, we need to just be good at executing on what we're trying to do. But as a company, we need to be innovative at every turn, because we can't do anything traditional and expect a different result. We gotta keep trying to push the envelope on how we finance, how we develop, and how we create efficiencies. That, I believe, is the opportunity in Indigenous communities, is like, we're very resilient, very malleable, very adaptive to circumstance. That's why we still exist in a lot of these places. We just need to take that and adapt those principles into the way that we resource our community and build our economy.
On that, what type of misconceptions and challenges have you seen in this space?
I mean, a lot of it is perception. You realize how much perception can do damage to projects. It's not even reality of like, there is risk, there definitely is. But just the whispering of a risk can do more than the actuality of a risk. Because if there was something we could address, we can deal with it. But if there's rumors and speculation, that does more to untangle confidence. And confidence is the one thing that we need to constantly reassure in these communities, because that's what gives us the marketplace. That's what gives us the transaction and the deals. And so one of the things, the misconceptions that comes out a lot, is that these are nearly impossible places to do things. And that's just not a, there's no truth really in that. They may be a little bit different, but part of it is because the communities themselves have different objectives when it comes to resources and capitalism in general. I mean, there's a reason you don't see billionaires on reservations, because if there was one, everyone in that community would probably be taken care of, because that's not like a community thing to seek individualism and individual wealth. So those are the things that we're seeing as like playing out, as we have strong communal bonds that we just need to unlock and untangle so that they can help inform a better version of capitalism.
Thank you. And to start wrapping this up, I'd love to hear from each of you, why now? Why are we focusing? Why is now the time for this?
I mean, the cost of inaction is great. Just in my own home province, in the last census, the average life expectancy of an Indigenous person went down by 6 years. So an Indigenous person in BC has a life expectancy of 15 years below that of a non-Indigenous person. I mean, things are not getting better for communities. And why is that? It's because of the exclusion, the extraction, and yet all the ingredients are there. The land, the wealth is there in the land, with trusting partners, access to capital in strong markets. There's no reason why this can't scale in a values-aligned way that really benefits communities. And so it's just taken, I think it just takes somebody to show that there's a better choice, that the community can then get behind and support, with that trust, overcoming the trauma, overcoming, a history of just bad relationships that's the norm. So how do we break that cycle from the community standpoint? And then how do we break it in the boardrooms and the investment committees, that Indigenous communities are a great investment to invest in, that because of these advantages, because these communities have good governance and they have strong fundamentals, and they're ready for partners and ready to support the overall economy and be included in that. So the ingredients are all there. It's going to take it is taking some bold action, and we find ourselves very fortunate and in a very responsible position. Our AUM is about $2 billion. We have a vertically integrated team. This is our third institutional fund. So we're really uniquely positioned to sort of lead this movement in Canada and demonstrate that this can be done in any other country. And we want to share, and the obligation and the sense of responsibility to act now is immense, both personally and for all those that we serve.
Thank you. Yeah, and MJ, the world's a complicated place right now. Why now?
I think because it should have been yesterday, right? Why now? Because we're so late already that there's an urgency to act immediately. But I also think, just like Michael said, because we're ready. There's so many more Indigenous funds, led funds, than there were before. there's an amazing movement and momentum, but I also think that impact investing in the community that we've created is grown and is ready to hear our stories, and we're ready to say, welcome in. We're ready to welcome you guys. So I think this reality of a relationship being ready to be developed is there as well.
Thank you. Yeah, it is. We're ready. So Brett, why now?
About 15 years ago, I installed like my first solar panel and battery system on a home. And one of the things that I immediately saw was we were at this Navajo elders family. She'd been waiting about 50 years for water and electrical connections to her home. Promised administration after administration, it'll come. And we installed this off-grid system. And I will say the lady the whole time kind of looked a little upset. You know, and what I think was going through her mind was she'd been promised a lot, and she was skeptical that this would work. When we finally were ready to commission the system, she didn't own a light bulb. She'd lived 50 years in this place. Her home looked, you know, a bit like a storage because she was just kind of using it to store things. We didn't really feel like she was living in it. So the only thing she had was a sewing machine that we could plug into the wall to test. So we do this, and I think she was still skeptical. She touches the pedal, and the thing goes off, lights come on, and she immediately, you see in her eyes something that I chase to this day, which is all of a sudden, all the mystery of solving these solutions get dispelled, and hope kind of comes through, and you start seeing them drive towards, okay, this is a reality now. And immediately she started planning for her future. I can't wait till my grandkids see this. I want to go and try to get myself water. If you figure this out, I can figure that out. For decades of despair to be undone by, you know, a couple of kids putting some solar panels on a roof, you know, doesn't seem like much. But that kind of movement building is what we're all seeking, which is how do you inspire folks to create their own incentive to join the movement? And I think that's why I feel like I'm, you know, that was years ago, and we do it a lot often, but chasing that feeling of creating those things has been something that I feel is worth, you know, our efforts and our time today.
Thank you. That is so beautiful. Very, very moving. Yeah, we're all chasing that too.
I would just add one more, like from an economic mind. You know, I did my MBA at Stanford down the, you know, up South Bay. You know, if you think about like compounding interest, right, and you know the wealthy barber and you know the value of saving money today and what that means in 20, 30 years. Think about the idea of compounding impact, right? So if you can make a difference today versus another, you know, that 1 year today, how that's going to compound down the road, and it's those light bulb moments that if we can make those happen today, imagine like how much quicker we can solve for some of our issues.
Yeah, compounding impact is a very, very fun thought. We're going to open it up for some questions now, or we can just more or less just have a conversation about some of these. If there's anything that inspired you, or if you want to talk about something a little bit more too, feel free to raise your hand, or yeah.
I have a mic over here too. So
He'll bring the mic around.
Thank you so much to all of the panelists for sharing so much wonderful insight. I was particularly struck by Brett's point about trust building, and I'm curious whether any of you have specific examples of external investors who came in and helped promote that trust building in a way that was positive, or alternatively bad examples where that didn't happen, and anything that you learned from either of those experiences. Thank you.
For me or for Brett? Because we both talked about it. All of us. I can. It's interesting that you're asking this question because we are building an endowment strategy for the foundation right now, and our strategy, we started looking at who was there from the beginning and believed in us when it was just like we were pre-seed, and we realized we had some key investors that were like, no matter what, we're going to be behind you guys, and we're there. You ask for what you need, and we'll support. Not many, but those few, we're reaching out, and we're going to honor them. And we're also going to say, we're inviting you to this next step in our journey. But yes, we add those people that were there and that were impact-driven, that saw that if you're acting now, you're compounding your impact, and then what you're doing can be incredibly impressive, but also important for the people that you want to share. All these people are values aligned. So they're people that obviously we didn't have to convince. They were already at the same place. They were hoping to get an opportunity to be invited. And these investors exist, and they're amazing when you find them.
I would say one of our a big part of our capitalization strategy is how do we use efforts to have multiple impacts. And one of them is, our investors kind of helped us in the way that we seeded the company. We syndicated a debt round that allowed us to put some impact metrics into the DNA of the company. So things like we have a share class within our company that was created purely out of this investment. We had impact investors taking equity level risk, but with concessionary debt. To memorialize that, what we did was we created a share class called the turquoise shares. That results in a share class that goes directly to benefit communities. And so when there's revenue, dividends, whatever it is, even some way down the road, we liquidate the company at some point after we've done billions of dollars of projects. What we needed to do is find a way to incentivize that trust, meaning that if we were to make a move, we have to think about the impacts that it has on our projects, on our communities, and all those things. When all the incentives are aligned, decision-making gets a lot easier to make because you're all moving in the same direction. The trick to strategy and all these things that we're doing is you have to be a little bit of you have to be an impact to all these different stakeholders and building mechanisms to help alleviate concerns they may have, but also contribute to success and incentivize and reward that trust building is something that we feel isn't just done on negotiations for a deal. It's done in the DNA of the company. It's done in the DNA of policy and movements you create out of this. And so that's something we've been I'm very proud of the team in putting that together, but also it's born out of our communication with investors that say, hey, why don't you think about this or that? It doesn't always work, but we're able to start massaging it into a place where it actually functions the way that we're intending it to, which is how do we use this to align all the incentives so that we know the expectation of what these funds should do if we're all moving, the same direction.
I want to add just something really quickly to this because I think it's an important element. Those investors that we were building trust relationship and are still there with us, we actually asked them to take a back seat. We told them, you can't always be front row. You need to take a back seat, you need to listen, and we're shifting power here, which means you're not going to make decisions. Mm-hmm. You're going to be here to support what's happening underground. And yes, you can ask questions, but it's not for you to make those decisions. You're here as a support. And those who have accepted that role are definitely the ones where the trust between the community and the investor is the strongest.
Yeah, I wholeheartedly agree with that. I mean, self-determination starts with listening and having the community decide what is in their own best interests. And sometimes investors want to fulfill a particular metric or, in our case, number of affordable housing units. Well, on a particular piece of land, and the community might not want affordable housing for this site. They might want market because they want to create sustainable revenue streams. One of the nicest things I heard an investor say was about Raven, and they said, your AGM, your gathering is their favorite, meeting that they have amongst all the managers that they invest in. And I think that it's because of the depth of the impact of the work and the heart that goes into the work, the sharing, and the healing, right? It's very rare in business to be in a relationship and have tears in business meetings, right? But that is a very standard practice in our work. And I think it's humanity, right? And it's really why we're all here. And so I just wanted to thank, the work that you guys do. Really, it really is inspiring. Thank you.
It really is inspiring. Thank you so much for everything that you all do. We have time for another question or a comment.
Nate Johnson, Arizona State. Brett, good to see you finally in person after about a year doing Zoom together. Fantastic panel. I'd be curious to get your perspective based upon the source of capital, and that's changing, right? There was a lot of federal money surge in the last couple of years. Solar for All and other programs have been cut. We're facing that, working with Hopi and Navajo right now. I'd be curious, thinking about this piece of trust and community engagement, how are you finding the trust relationship or the community engagement aspect of it, or the quality of the trust, the community aspect, change based upon the source of capital, federal or non-federal, and how do you approach that in your communities?
I mean, I can speak to the things that we've raised capital from. A lot of our investment comes from the impact world, but we have a subsidiary that's called Navajo Power Home that does off-grid that's got some federal money. The federal money, especially in this day and age we're living in right now, one of the purposes that I felt the need for Navajo Power was necessary in terms of organization was there's a like a comment I got when I got out of college. I went to Arizona State, so I graduated there, went back home, and started working in my community. And I remember we were trying to develop this road, and the federal government came in, and they were saying, okay, we have this money, we can use it for this or that. There was a very simple kind of adjustment we needed to do, but the feds kept pushing back, said, we can't do that, can't do that. And they made a statement to me that I carry to this day, which is, if it's your money, you can do with it whatever you want. But this is federal dollars, you're going to do it our way. And that sentiment is stuck with me because it's very important where we get our capital from and who's behind the curtain, But it's also very important that when we do find these incentives that don't meet our alignment, that one, we address them and try to work through them and make sure that we hold, that point that this is a necessary thing. But the other part is like federal money just feels like it's lifeless sometimes. Like it comes in and it has no emotion or feeling, but it has all the restrictions. It has everything to tell you no. What I've been so appreciative from the impact world is that a lot of that money comes with patience. It comes with a lot of attention. It comes with additional care and compassion that you wouldn't get from an institution, meaning it has emotion in it. And I used to say this in a lot of these conferences, like money has vibes, it's like, it definitely has a way of like coursing through your organization and causing friction when it's not good and causing elation when it's found its success. So I do think we got to be also careful in how we resource things because, building any foundation requires us to do that precisely and accurately. Otherwise, the rest of the organization is built on this kind of faulty narrative. Those mission kind of things I was pointing out were really related back to what do investors give us, permission to retain, with their money, because we don't have to take their money. But a lot of times, Indigenous communities, we have two choices, the feds and whoever else will give us dollars. That makes it to where we have to be very careful in how we resource these things, but also what parameters we choose to stand by, because that influences the marketplace and establishes that. And obviously, I'm very proud of our organization because we've held the position on a lot of places that's influencing other developers to follow, influencing other investors to have to at least listen to these options. And so it's changing the marketplace because we decided that there's got to be a better way to do this. And we found the partners that allowed us to kind of create that platform so that we can tell the rest of the marketplace, hey, we don't agree with the way that you're looking at this. This is the better way. Come and join us on this side.
That might be the most beautiful thing I've heard all week. And we do have to wrap up soon, but if there's any closing thoughts that anybody wants to share before we wrap up the panel, please feel free.
Just gratitude. Thank you for being listening and sharing. I think if I can leave you with one kind of feeling, it would be around hope. And I think there's just a tremendous positive movement going on and incredible opportunities, both financial and impact. And I think we appreciate so much capital that is asking questions. What can I do to support? And I feel that in this community, and it's a pleasure to be here and to have build relationships with all of you. Thank you.
Well, also filled with gratitude and honored to have been part of this panel. Thank you to our moderator and my co-panelists. You guys are so impressive. And I love hearing your stories. It's inspiring. But to all of you too, so we're here on the stage speaking today, but you all are carrying amazing projects. And for me, it's always this, okay, well, I want to hear about everybody in the room now. What's your name? Where do you come from? What do you do? Why are you here? What drives you in the morning? What do you like to do before going to bed? Do you need a pillow in between your knees? Because I do. Just to get to know people for who they are, because this is what we're building. This is how you're building community. And I get really excited to hear and energized by the strength and the courage that are in those rooms. So just happy to have conversations after this and to start building those relationships. And thank you so much for listening to our stories.
Yeah, and from the bottom of my heart, from our communities, it's the work that goes on in rooms like this that ensures that there's resources back home for people to take advantage of. There's homes now that have power on them that otherwise wouldn't without, contributions from organizations like you all. That kind of work, and that's the reason we show up to these things every year, because we know that it's very important to keep these conversations alive, even in times when we're dealing with a very abnormal year, it seems like. But even with that, the tenacity and the, the kind of strength of what has been built over years, this is the crew. Like I was thinking this morning, it's like, yeah, we may not fill every seat, but we don't need to. We need to just keep adding people to the seats so that the movement continues to build. And over time, we know we'll get where we are. So I just want to express appreciation. And also just, to the panelists and to the moderators, I just really encourage to keep conversations going, because I think there's a lot of things still to be addressed and new innovative things that we're only going to resource and figure out if we keep having these dialogues. So I really appreciate it.